Hi guys, good afternoon. Arun Juyal here. I again welcome you to my YouTube channel. Hope you guys are doing well. I thank you for watching and liking my videos, and thanks for all the love and support you have shown to me and my channel. And if you have any queries or questions, do write to me. As I always say, you can write in comment. I'll try to answer them. And as always, I brought a new topic today. Today it's a bit of like technical because the last few videos were more about psychological part, about behavioral things, behavioral finance, and today it's about how to read a fund sheet properly, what you should look for as an investor. I'll try to break down in 5 points. The first point is that uh, fund category and objective. Uh, you should always look for fund fact sheet. And the first thing you need to look in the fact sheet is that you need to see fund category and investment objective and see if it aligns to your long-term goals of investing. And if they doesn't match to your long-term goals, then there is no need to look further. Second point is that long-term performance. Always look for long-term performance. Ignore 1 year or short-term numbers. Look for 5 years or 10-year performance, and if it has delivered robust performance for this time, then you may consider that. Third point is that portfolio composition and concentration. You always need to look for the composition of portfolio. Is it overvalued in some startups or IPOs? Then you may need to look for uh, look into go deep into that. That why is it buying startups and new IPOs which don't have a performance history. You need to look for that. You need to look for holding pattern and concentration in one industry. Unless it's a thematic fund, you need to do that. And you need to avoid funds which are concentrated in one industry or concentrated in IPOs, because it may be riskier even if the performance look good on the paper. The fourth point is that risk metrics that matter. Always look for risk metrics. You need to look at the volatility, how the fund has performed when the market has performed. Look at the alpha, look at beta, and not just return. Of a smoother fund is often easier to invest, and it will help you in a longer run. The information ratio that you need to look for. I'll try to make a video on that as well uh, in the later part. And the fifth point is that you need to see whether your this one fits in your overall portfolio. Uh, this point is very critical. Now, here comes the role of an MFT or an advisor. You need to see whether this fund fits into your overall big picture. What I mean by that is that a small cap may not be a good fit for a retiree, or just an example. And high exposure in debt fund may not be good for a newbie 20-year-old guy. So you need to look at that, and an NFT can help you, an advisor can help you in that. So the idea to look in the fund fact sheet is to see whether the fund fits is meeting your investment objective. I discuss that in 5 points. I'll repeat those 5 points once again. The first point is first fund category and objective. Look at that. Second point is long-term performance, not 1 or 2 year performance. Third is portfolio composition and concentration. Look for composition and concentration. Fourth point is risk metrics, and that matters. Information ratio alpha, and how this how the fund has performed when the market has fallen. You can check that from information ratio. And the fifth point is whether it fits with your overall, how does it fit in your overall portfolio. So you can see these things in a fact sheet. It will help you. You can always seek an advice from them. End of the day, you can seek advice from me as well. If you have any queries or questions, do write to me. Thank you very much. Have a great day and happy new year 2016. Cheers. Bye.